Okay, so since the year 2000, the World Economic Forum has identified more than half of the world's fastest growing economy to be located in Africa. Sub-Saharan Africa has around 29 stock exchanges representing 38 countries, including 2 regional exchanges. So efforts are being put in place by all countries to boost the exchanges by improving investor education, confidence, improving access to funds, and making the procedures more transparent and standardized. But are the youth really aware of this? This evening, Define Your Voice Network has brought together 4 panelists to tackle the topic, investing in stocks across multiple stock exchanges in Africa. The goal of Define Your Voice Network is to build a proactive and a problem-solving mindset among the African youth. We at Define Your Voice Network would like to appreciate and thank the following sponsors: the Jazza Center, Ritz Attorneys, Mari Fasasa, Nani's Online Shop, Africa University Students Platform, and Borderless Podcast. Before we start, may I kindly ask Bongani, Consolat, and Tetra to tell us quickly, what is DYV? What is Define Your Voice all about? Bongani, the floor is all yours.
Thank you so much, Stanley. I'll just go straight to the point and share a little bit more about Define Your Voice. Define Your Voice is a youth-led nonprofit and non-government organization with the goal to build a holistic and proactive African youth. So one of the ways that we achieve our goal is by hosting panel discussions like this one, where we bring together young Africans from across the continent to learn from one another's experiences and to learn from one another in general on how they can go about life and bring in an impact in the various communities. So I take a discussion on investing in stocks as one of the most important discussions that we have to be having, because I know that not many people know a lot about investing in stocks, and let alone investing in stocks across multiple stock exchanges. So I salute you all for sparing your time and being a part of this panel discussion. And I hope that whatsoever that we learn, whatsoever that our panelists have prepared for us, we'll keep it at the back of our minds. And whenever we're faced with an investing decision, we're going to use the information that we have learned today to make an informed decision. I would also like to thank our panelists and our facilitator, Stanley, our sponsors, as you have mentioned them, and the audience for sparing the time to be a part of this panel discussion. I would also like to take this time and share about the e-certificates that are going to be issued for attending the panel discussion. Just be on the lookout. During the course of the panel discussion, I'm going to share a link to Google Forms on the chat box. So just make sure that you fill out that form, and we're going to use that form to collect your details, which we're going to use to update the certificate and send it to you via email. So please just make sure that you fill out that form. With these few remarks, I hand over the platform back to you, Stanley. Thank you.
Thank you very much, Bongani. Thank you very much. So let me quickly introduce our panelists. From Malawi, we have Kelin Kanyangala, who happens to be the operations manager for the Malawi Stock Exchange. She is a graduate in accounting from the Malawi Polytechnic, also known as MUBAS. She's a chartered accountant with the ACCA and has a master's in finance and investment. Kelin, good evening. How are you?
Good evening. I'm good. How are you?
I'm very great. I am not enjoying the weather, but I'm fine. Thank you.
I understand. I'm also in Blantyre as well.
Okay. All right. Okay.
Yeah.
So, okay. Thank you very much, Kelly. From Malawi, we also have Doreen Manjandimo, who happens to be an attorney with Ritz Attorneys. She specializes in corporate finance. She holds a bachelor's of law from the Chancellor College. She also holds a master's in commercial law from the University of Cape Town. Good evening, Doreen. Hi, how are you?
Good evening. I'm all right, thanks. How are you?
I'm very well, thank you. Okay, so from Sierra Leone, we have Michael Benga. Michael is an accountant at Alchemy Properties in Manhattan, New York. He holds a degree in accounting from the University of Oklahoma. He's currently pursuing his MBA in public financial management at Clark University. Michael, is it good evening or good morning or good afternoon in New York? How are you doing, Michael?
Hey, Stanley, it's good afternoon. And just to clarify, I don't work at Alchemy anymore. I used to work there as an accountant. So that was my first job as an accountant. I'm pursuing my master's full time right now.
Great. Thank you for joining in. And from Botswana, we have Kaho Tswaite, a graduate in accounting from the University of Sheffield, Hallam. And he's currently pursuing his MSc in Finance and Investment Management with the University of Salford. He is a seasoned qualified financial consultant and a published author with two books. Kaho, good evening. How are you doing? How is Botswana?
Hey man, I'm good. Thank you. It's a privilege to be here. I hope I'm audible.
Yes, you are.
Yeah, we've been having a load shedding. I was so scared. I'm super excited about this event, and we are having a load shedding this side. Botswana is good, quite chilly. The province, we have been having this load shedding issue for some time. I think 2 weeks now. So I think it's been the challenge. But other than that, everything is good. The markets are good. The environment is okay.
Great. So it seems that Malawi and Botswana are in the same WhatsApp group regarding load shedding.
I hear that you just actually been teasing me new fans. I'm a Man City, so I don't get in your issue.
All right. Okay. Thank you very much. So let us start. I know that the audience is very eager to learn about shares. So, Kelleen, we'll start with you. Since your day-to-day job is operating everything share related, may you kindly tell us the basics of stocks, or as we call it in college, may you give us a course called Stocks 101? Kelleen, the floor is yours. Oops, you're not audible. You might
Probably on mute.
All right, sorry. All right, thank you so much. I think I should start by also thanking the organizers of the event. As you mentioned earlier, I think it's really important that as young people, we really learn about the stock market and how we can actually participate. What are the benefits? What are the things we should consider? So yeah, I'm quite happy to be able to provide that insight to the participants as well as the listeners. So maybe before we dive deep into how one can invest or purchase stocks, how they can go about it, maybe it's really important to understand that what is really happening. Let's say when you're saying that you want to buy stocks or you want to really invest in the stock market. So for that, I think I'll bring it back a little bit to say that when it comes to our day-to-day life, I think we really now have gotten to understand the importance of having savings as well as investments. I think if we look at the past 2 years or so with COVID especially, I think there was quite a lot that happened that disturbed the day-to-day normal life that we were used to. So we found that people, in terms of businesses, they were failing. Some people had to get pay cuts, others had to be laid off. And in those instances, I think it was really important now in terms of having savings, at least to lessen the impact of what was really happening in the environment. That is not to say that when it comes to investing, it's all about the rainy day. I think it's also important just to learn about investing just for the sake of learning how you can actually finance your goals, be it education-wise, be it if you want to build a house, be it if you're planning for your own family as well as children. I think it's quite important to learn about the stock market because it's really an area that I think we're lacking as Africans in terms of knowing how that operates. So when you come to the investment space, when it comes to savings and investments, I think there are two approaches, main approaches that are looked at. We have the short-term investments as well as the long-term investments. When you're looking at short-term, you're looking at a period of 1 year or less. whereby you say that, what if something happens? Let's say there's an emergency, or there's just something that has occurred that needs extra expenses. Are you able to afford that? Are you able to finance those expenses? So ideally, I think the standard is that at every point in time, everyone should have at least 6 months of their monthly earnings. So if you're maybe getting 500,000, multiply that by 6, that should be within your short-term investments. And then you also need to have the long-term investments. That's where you're looking at 1 year and above, where now you'll be looking at those strategic goals, whether you're looking at building a house, whether you're looking at financing your education, whether you're looking at even raising capital for your business. That is actually really important for you to have. And you should have both the short-term as well as the long-term investments. So when you're looking at the long-term investments, that's where the issue of stocks comes in. We have other investments within that arena as well. In terms of long-term, we have the real estate, you have bonds, you have insurance policies and other savings policies. Go up to even 20 years or more. So that is still in the arena of long-term investments. So when you're looking at stocks specifically, it's really simple. It's a really simple concept to grasp, because you're just looking at you becoming a part owner of a business. So if you say, let's say you buy a share in a bank, let's say National Bank of Malawi, which is listed on the Malawi Stock Exchange, you are now becoming a part owner of that business. So as a part owner, you do have rights that come with that investment in the business, whereby, let's say, if they normally is an annual general meeting where people actually, as members or shareholders, you vote on strategic decisions of the company, be it in choosing the directors, be it in selecting the auditors that will be providing an independent opinion on the financial statements, and other rights, including even when the company declares dividends, you find that you can also participate because you are an investor, you're a shareholder of that particular company. And as a shareholder, I think if you own stocks, there are quite a number of benefits attached to that. For instance, as I've alluded to, you do have the dividends. That's where if a company declares profits, then at least you also gain those dividends, declares dividends. You also allotted some of those dividends depending on the shares that you actually have. So let's say if they're declaring 10 kwacha per share, if you have 2 shares, then that is 20 kwacha to you, something that maybe if you were not an owner of that company, you wouldn't really have access to. And then we also have what is known as capital gains. That's where if you bought the share, let's say at 10 kwacha, and then the share price goes up to 20 kwacha, that difference is what is known as a capital gain, because now you can sell it at a higher price. And then you can also use your shares as collateral. If you want to access loan facilities, that can actually be utilized as a collateral with the banks. So there are also some risks that normally would also want to highlight when you're investing. As I mentioned earlier, you're investing in a business, and with business, things happen. The business can perform well this year, it can perform badly the other year, depending on the macroeconomic fundamentals, as well as the industry of the business itself. So even like the previous years, I think with COVID, we saw that the tourism sector specifically, they had quite a huge impact, negative impact on their performance, because obviously there wasn't that much travel happening. So it can happen that the share price can actually fall because that company is not performing. So that's where you need to actually engage specialists. You can engage the fund manager or a financial advisor who actually help you to purchase the shares that are in line with your goals. And also, I think the key is always to diversify, looking at different types of shares. And I think in this case, I think especially with this forum that we're having, it's also important to diversify even with in another jurisdiction altogether, where now you're not just looking at one stock exchange, but even other stock exchanges. And I think there are already initiatives towards that. If you look at the body, especially in the SADC region, we have the Committee of SADC Stock Exchanges, which actually has a project where they're trying to link all the stock exchanges within the SADC region so that people can actually participate in all the stock exchanges easily with the infrastructure that is actually available. In terms of the mechanics, I think we'll go deeper into those ones a bit later, but I think the approach is quite similar. All of us, I think most of the exchanges, at least, they do use a broker model. What I mean by that is that if you want to buy shares, you go to a broker, a stock broker, who will then sit down with you, open an account, and opening the account is quite easy. It's the normal KYC, and that is according to the law. Just to make sure that there isn't any money laundering that is happening. So you give your national ID, your proof of source of funds, your addresses and all that. And then you open your account, they'll sit down with you. What is your strategy? What are you looking at? What are you looking to benefit? What is your goal? And then based on that, they'll recommend to you to say, okay, maybe you can buy this, but it's not really, you don't have to take that advice. If you already have something set, you can, and you have the knowledge of how that works, I think you can always do that and go ahead. So I think that gives the basics, the 101 of investing in the stock market. I think we'll be able to dive deeper into some of the issues as we go along with the discussion.
Thank you very much, Kelly. I have learned a lot from the 101 basics of shares. We've learned that once you buy shares, you become an owner of, let's say, an entity or a company. You are able to attend AGMs, you are able to make decisions at AGMs. You can also use your shares as collateral. You can get dividends if a company makes profits. There are also capital gains that can happen from your shares. And once you sell them, you can get a profit from that. We've also been told about the risks involved with shares. We've learned that with COVID, the tourism sector was hit badly, and there were losses made. So thank you very much, Kelly. We've learned a lot. I'm truly thankful, and I know that the audience is truly thankful. Now, having learned about the basics of stocks 101, why should the African youth invest in various stock exchanges, and how can the African youth invest across multiple stock exchanges? Kako, would you like to tackle that? Why should the African youth invest in various stock exchanges, and how can the African youth invest in multiple stock exchanges?
Oh, I thought I had unmuted.
Oh,
Thank you so
okay,
much.
Yeah.
The first speaker really laid a great foundation. I think she touched based on so much issues that are of relevance to this discussion. I don't know if I need to put my video, but I'm afraid because of the bandwidth, since we have this power issues. So can I please request that I just use my
Yeah, that's fine.
All right. Yeah. Like the first speaker already said, there are so many different factors of why people will go into the stock market, not only the youth, but anyone who wants to invest. And the very first thing and fundamental thing is to understand your why. As to why they should invest, they need to understand, I think, what has been laid in the foundation, that there's a difference between short-term, medium-term, and long-term. Maybe to break it down to say less than a year, we'll regard it as a short-term. Issues of to say, look, I want to pay my school fees, whatever the plan you want to do and use, you put into less liquid, means most liquid shares or stocks that you may tackle. And then the medium term, that's like 5 to 8 years or so, 8 years or longer would regard it as long term. Mostly is for people or youth who start working right now and they want to invest, have their money to work for them in the future. So they may first decide as to why should I invest in the stock market. Is it for a short time, a medium time, or a long time period? And like she alluded first, there are so many different products in the stock market. Exchange traded fund, there are stock markets such as shares, bonds, ETFs. So you need to really understand what they are, how they work, and what are some of the pros and cons as regarding to that. But the main, I'll talk about the two main benefits as to why the youth can invest in the stock market. The first one is income or dividends, as they call in the finance sphere. Income is to say when you own a part of a company as a shareholder, either ordinary or preference shareholder, you have the right or privilege to be given an income depending on the chosen time of payment in terms of shares, in terms of the type of shares that you have, either quarterly, annually, or semi-annually. In terms of your dividends, that is an income that you get because of putting money into that company, because they make the use of that money to create extra income, and they may declare some dividends to say this is for our shareholders. Then the second one is capital growth. Capital growth is where I bought shares for $10,000 and the market favors me and the growth of my shares go, like you can see your Facebook, your Google, your Tesla, and I buy them. Then after COVID, I bought them for $10,000 and they are valued at $100 after COVID. That means I've gained $90,000. It means that my share, maybe which I had bought it for around $1, right now it's worth $10 per share. That means if I sell at that value or market value, that means I've gained extra 90,000 on top of the 10,000 that I've invested. So it means I have had a capital growth. That means you can put money and also enjoy the capital growth as and when the demand and supply of such a share or such a product is taking place, looking at the demand and supply, which is the most thing that affects the price changes. Then some of the important information that you may regard when and why you should invest in different stock market. I myself have shares in New York Stock Exchange, Johannesburg Stock Exchange, and Botswana Stock Exchange. I'm currently in Botswana, but I've been in the England area part of it at the London. So what I got to realize is that there are so many factors that are making different stock markets to look or differ. Issues of political stability. You realize or appreciate that different countries have different political stability. So you'll find that certain companies, which I don't know if I would say politically affiliated, some of their share prices may be affected by political instability. Most of the companies, when there's political instability, the share price is affected, and also demand and supply. You'll find that Facebook, Google, TikTok, all these top companies in the world, their demand for their shares is so high, and as compared to other unknown companies, which are mostly in Africa. So I will always say, in Africa, if you want to invest there, you need to do your research. There are companies that are dual listed. Dual listing, I mean, companies in Zambia, is in Malawi, or is in Zimbabwe, and is in Angola. So you can look at such companies because they will benefit you both sides. If there is a political instability in the other country, the other one, there's no political instability. When they declare dividends, you'll get that benefit. So I will say you look at the benefits of how can I invest in different stock market and what are some of the companies that you can invest into. The other option is to look at industry, because companies are listed as per industry. There are those in the finance, tourism, manufacturing, service providing, and so forth, banking, and so forth. So if you are someone who don't understand the sector, don't invest into that without seeking financial advice from the relevant people. Like most of the stock markets, you'll find that it's broker way where you have to approach a broker. They help you with buying shares, then they give you that shares that you want. So you need to get advice on that issue so that you can see, is it wise to invest in Malawi? Is it wise to invest in Zimbabwe? Is it wise to invest in Egypt? And when you look at all the factors that are put to the table to give you, I would say, a definite idea of the direction that you should take. If right now I was looking at the what do you call, Rwanda Stock Exchange, and I was appreciating some of the newly listed companies and what they are doing, and I'm still working on the research to understand how that works. But I got to realize that they have been doing good. Their share price is booming, and the stock market there is mostly active. And remember, the most effective way that will shake the price or move the price is the demand for such a stock or such a commodity. So most of the time, as a youth, you need to sit down and look at, okay, fine, I have a stock market in Botswana, I've bought the shares here. So what are some of the stock market that I should look at, so that you can also diversify your income, because it's very safe to say, don't put your eggs in one basket, because when they break, everything has fallen. So if the stock market is not really active, that means your money won't grow. You won't gain any benefit out of that. But when you put it in different stock market, you get to benefit and appreciate the difference in these different markets that you will be investing in, as well as economic factors, which differ from one place to another. Issues of inflation, issues of tax, issues of legal and regulation or compliances. They can even actually have an advantage to you if you do your own research. That's why I'm saying, if you are not much well invested into this area, please approach your stockbrokers so they can give you adequate information and adequate access to markets and understand indeed what you want to put yourself into. But like I said in the beginning, you need to understand your why and how long do you want to invest, because that will guide the type of investment you can put into, the type of community you can get into. I think let me stop there. I think I will share some of the things as we go much into the session.
Thank you very much, Kaho. Thank you very much for that insight. He talked about the benefits. We've learned about when you invest in stocks, you get two benefits. First of all is income. You have the right to gain income or dividends, and there's capital growth or capital appreciation in the dividends, in the shares. And he's also given us advice that if you want to invest in the stock exchange, the first thing that you have to do is you have to do your own research, one. Secondly, you also have to consult a broker who will give you advice about the industry, about the economy, so that you can make a very prudent decision. Thank you very much, Kaho. So we've talked about investing, we've talked about the basics of stocks. Now I want to talk about the law. Having heard that we can invest in various stock exchanges, how sure are we that the law will protect our investments? We all know about Enron. We all know what happened to Enron. How sure are we that the law will protect us? Let's discuss shares and the law. Won't an Enron sort of scandal bite us if we invest in shares? Doreen, what's your take on this?
All right. Thank you for having me. I'll take you through the shares and the law, specifically as it relates to protection of investors. But before I get into that, just a bit of a background, just to state that actually the law, this issue of investing on stock exchanges is not an alien to the law. The law actually recognizes this process. The angle that the law recognizes it comes from corporate finance. So the law recognizes that companies can raise funds to finance its operational, capital, and other type of expenditure in a number of forms. These include using retained profits, equity, debt, and using of assets in contracts like sales and leases. So our focus today being investing via the stock exchange falls under the financing form of equity. So equity financing is a way of financing companies in a process where the company that seeks to raise the funds makes shares available for subscription by private investors or to the public, with the hope that the investors will take up those shares that have been made available and in turn provide the funding that is needed by the company. So equity financing can further be divided into two categories, which is private investments and public investments. Our focus is in the area of public investments, where shares are offered to the general public by a public company that is seeking to raise funds via the stock exchange or the stock market. So the genesis of the process that we're discussing today is a public company that wants to raise some funds via the stock exchange. So what it does, it will make shares available on that market for subscription by investors, which is us, the youth. So Once the investor takes up the shares that have been made available on the stock market, the investor becomes a shareholder of the company whose shares have been bought. And by that process, they gain an interest in the company, which is at law referred to as equitable interest. So the stock market in this process just facilitates trading of the shares, as the people that own them want to sell them on this medium, and investors use this medium to own the shares by buying them. So the law actually recognizes this process, and it actually goes beyond just recognizing this process, and it goes beyond and actually provides for the governance of this process and regulates the functioning of the market. The purpose of that the law does this is to ensure that the market is fair and efficient, and that all the players involved are involving or conducting trade in a fair and efficient manner. So bearing in mind that the law actually plays this crucial role of ensuring the market is fair and efficient, it is important for anyone who wants to invest to have knowledge of the relevant laws, regulations, and policies that affect this process. So the legal and regulatory framework is very broad and dense, and it cannot be exhausted in this discussion. However, I'll simply highlight some areas of the law that I found to be very important, especially as it relates to ensuring investor protection in this process. So I wish to state and to stress that this is not a discussion of the entire legal and regulatory framework. It is we've merely singled out some parts for purposes of today's discussion. And I would also like to point out that stock markets in Africa, they come in different varieties and require deep understanding. And they also operate under different legal and regulatory framework. So it's important to know particular law and regulations that apply to the stock exchange you wish to invest in. But be that as it may, there are some common areas that exist in the law, which I will now highlight, that touch on protecting investors. The first area of law that I would like to highlight is company law. This is one common area that investors should look out for because of some important aspects that it has to the process. Under company law, there are several ways. First, it is more often than not, company law provides for disclosure and reporting requirements that companies involved in trading shares on the stock market must comply with. So these requirements mainly seek to ensure that investors have sufficient information for them to be able to make an informed decision on whether to invest or not on the stock market. And it also seeks to ensure that investors have sufficient knowledge on the cost of the return on their investment and what they can expect the return to be. For example, coming to Malawi, our Companies Act requires a company to issue a prospectus. This prospectus should contain all information that investors and their professional advisors would reasonably require and reasonably expect to make an informed assessment of the company's assets, liabilities, their financial position, and the prospects of the company in general. So by making this a legal requirement, investors are actually assured that they'll be able to access information to help them make an informed decision and to make a secure investment. This is an important area to look at because there are some countries that may have less stringent reporting requirements, and these would put investors at a greater risk. Another aspect of the company law that from which investors can be protected is the role of management and shareholders that is provided under the company law. So as a background on this point, most company laws provide for how companies are to be governed. And generally, the board of directors are the ones who are given the power to govern the affairs and the business of the company. So that is, the company is governed by the board of directors. And usually the board is not made up of shareholders. So this results in a situation where shareholders are not usually involved in the day-to-day management of the company. So the law then comes in place to put some mechanisms that protect the shareholders, who are the investors in this case, who have been placed in the hands of the board. Some of these roles that have been put in mechanisms to ensure shareholders are protected is that the law provides for duties that the board holds and the standard on which these duties are to be discharged for the benefit of the company. Generally, the role, as has been already said, is that they are to run the affairs of the company. Now, the law comes in and provides that the duties must discharge this function in a manner that is in the interest of the company. So, for example, in our Companies Act, the law requires that the board should discharge its functions in an honest manner, in good faith, in the best interest of the company. So in that case, they would avoid conflict of interest and any other behavior of that sort. And it also requires them to discharge their functions with a skill of a reasonable person. So this imposing of the duties on the board just makes sure that the directors are on the best behavior and they actually act in the best interest of the company, thereby protecting the shareholders or investors from loss that would arise if they just discharge the function any way they seem fit. The other aspect is that the law doesn't just simply put these duties to the directors. It actually allows shareholders to take action against directors where they seem to have breached their duties, their legal duties, and where a loss has been occasioned. So just to explain on this, the law enables shareholders to take to task officers who breach the legal duties that are imposed on them. So where necessary, shareholders may be allowed to call for a meeting or express any concern that they may have on how the company is being governed. So in this case, if the shareholder thinks there's a threat to the investment, they're allowed to call for a meeting and express these concerns and move to rectify the same so that they're protected. In other situations, company law also provides for a number of remedies and protective mechanisms that shareholders may have recourse to, and it permits shareholders to actually sue the directors for breach of their duties. This all just works to ensure that directors are on their best behaviors and conducting their duties in the best interest of the company. So everything they do, they'll have to think of the company first and the success of the company. And as was earlier stated, by virtue of being shareholders, they're allowed to attend meetings. And at these meetings, they're allowed to actually vote on issues that may come up at the meetings. At these meetings, they're allowed to, it gives them a platform to ask difficult questions to directors that may affect the security of the investment. So it actually enables them to express their views or lobby support from other shareholders, just so that their investment is protected. Another aspect that company law comes in is that it might place supervisory or policing powers in other bodies, just specifically to ensure that the company and its board comply with the law and to ensure that shareholders are protected, since the board is the one in charge of governing the affairs. So in these jurisdictions, the law actually points out an authority that supervises companies and their performance and actually plays a policing object. So they can rectify any harm or threat that they may notice or that may be reported to them. There is also an aspect under company law that is called shareholder activism. This just simply means that in company law, some laws are drafted in a way that creates an enabling environment for shareholders to conduct themselves in an activist-like manner. So they can intervene in the governing of the company, just like activists, just to secure their investment. So it allows them greater participation. And instead of just giving all the governing to the board, they actually have active ownership of their investment. So wherever they see something concerning, they can actually call for a meeting and express their concerns and influence change where there's need. Another area of the law that might come in to protect investors is the securities law. Some jurisdictions, like in Malawi, have a law that is specific to securities, which is shares and share-related aspects. So, for instance, in Malawi, like I've said, we have a Securities Act, and it sets out to provide for regulation for capital and securities markets and persons transacting in those markets. The object of this act is to promote internal and external confidence in the integrity and proper functioning of the capital markets. So under this act, there are specific provisions that deal with protecting investors. Like in our case, the act provides for a wide range of things. Specifically for protection of investors, there are several provisions that are in the act. There's a registrar that is given the power, supervisory power, to take all reasonable steps to safeguard interests of people who invest in the securities. So this is an area of the law that people should look out for, to see, they should do some due diligence to see if such a law exists, so that they may be assured that there's some protection. If we look at this act, it is very apparent that investor protection is regarded as an important aspect. And it is very clear that there's a lot of power that has been given to supervisory bodies to ensure that investors are protected and to curtail any act that might threaten their investments. So it also provides for market conditions. It tries to regulate market conditions and practices, which are all aimed at protecting investors and their investments. Another area of the law that one should look out for is in different exchanges, there are rules that apply to the different exchanges. So one should also look out for this and look, because they also offer some aspect of protection of investors. They provide for the disclosure requirements, detailed disclosure requirements. Also, they'll provide what information one must disclose. This all just makes the process of determining whether to invest so much easier and so much safer. Another area of the law that one must look out for is taxation law. There are so many aspects of tax law that must be considered by an investor. Some of these double taxation issues. So it was said that since an investor becomes a shareholder, they are then entitled to dividends that are paid out by the companies. Now, dividends in their very nature are potentially subject to economic double taxation. That is, they might be taxed in the hands of the company and also be taxed in the hands of the recipient. So investors must look out for these. The trend is usually that in some cases where the dividends are taxed in the hands of the company, they are either exempt in the hands of the shareholder, or they are subject to a lower tax imposed on the shareholder. I think tax just goes to the cost of the return that you might get. It attacks the cost of the return or the value of the return that you might get from your investment, which is why investors should look at these issues. So in some cases, there are agreements on double taxation between different countries or different economic blocks that might lessen the threat that your dividend value will be subject to double taxation. There are also other laws like tax treatment of foreign investments that should be considered. For instance, how is a dividend from foreign investment treated in the investor's own country? And other laws like tax and foreign equity investors. Some laws specifically provide for tax treatment of foreign investors. This can be to make investment more attractive in the country. So investors should always look out for this, consider them in determining whether to invest and to determine whether it is safe and profitable to do so. Another area of the law that one must look out for is the exchange control law. Since we're talking about investments in the African continent, there's certainly some cross-border transactions that will happen. So it is also important to look into this to determine how they might affect the investment you wish to make in another country that is not your home country. Another area of the law, just to close, is protection in cases of bankruptcy or winding up of a company. So generally, where a company is being wound up, the assets of the company are put together and then they're used to settle affairs of the company. Now, the settling of the affairs takes some stages according to the law. Firstly, you settle creditors of the company, and then you settle people like employees, service providers. Generally, shareholders are paid last. That's if there's any excess left after paying the creditors and the rest of the other people. So looking at this, one might think it is not safe, but I believe that would be a rushed conclusion, because a bankruptcy or winding up is not an event that occurs overnight. There are some steps that shareholders may take to actually curtail this possibility or to lessen the risk. The reason I'm saying this is shareholders during the lifetime of a company, they are furnished with reports on the financial performance of the company, and they can actually, at their own instinct, they can ask for these reports. So if they notice that the company is not performing well and that there's maybe a lot of debt and they might not be able to settle all this, they can take some action. They can call for meetings, they can lobby support from other shareholders just to change the direction of the company. They also have the liberty to change the management. So that is, they can remove the directors that are existing if they think they're not managing the company in a successful manner. So it would take a lot for the company to reach the winding up stage, or a stage where they really have to close business. And I think the law offers a lot of protection. There's a lot of rights and duties of the shareholders that they may take to actually avoid this situation. So, as I said, it is important for investors to actually conduct due diligence on the law that applies to them when they want to make an investment in a certain jurisdiction, to actually determine if the law will offer them a lot of protection or not. So we cannot speak for the whole continent. It's a case-by-case type of analysis that must be conducted. Let me stop here. I've taken a lot of the time, sorry, but it's just a dense area.
Thank you very much, Doreen. Yes, it's such a dense area indeed. So it seems that the law is actually out there to protect investors. But as Doreen has stated, that it's a case-by-case scenario where at times you might be protected or at times you might not be protected, depending on the area where you are from. We've learned a lot about shares, stocks, and the law. We've learned about the remedies to any violations that can happen. We've learned about investor protection. We've also learned about bits and pieces of corporate governance over there, whereby the law is actually bent pretty much on protecting the investor. Thank you very, very much, Doreen. She also tackled issues pertaining to the Securities Act and taxation, double taxation treaties and all of that. Thank you very much, Doreen, for your input. That was very, 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 very nice. Now, having heard that the law is out there to protect the investor, how then can we manage a portfolio? Let's say you have a portfolio, you've invested in stocks, and you have a diverse portfolio. How can one manage a portfolio? And secondly, should one invest in the long term or in the short term? Michael, what's your take on this?
Hey, Stanley, thank you so much for your question. I want to say a big thanks to the organizers for doing this. Thank you for the opportunity. It means a lot. Hey guys, my name is Michael Benga. I am from Sierra Leone and I am an accountant. I will be talking about how to grow and manage a stock portfolio. But first, what is a stock portfolio? Well, according to public.com, a stock portfolio is a collection of stocks in which you invest with the intention of making a profit. So a portfolio can have 1 stock, 2 stocks, 3 stocks. Can we mute our mics, please? Thank you. Thank you. So as I was saying, public.com defines a stock portfolio as a collection of stocks in which you can invest with the intention of making a profit. So you can have one stock, you can have two stocks in a portfolio, three stocks, as many as the platform can offer. Basically, you can have you can have different types of stocks. You can have all technology stocks in one portfolio, healthcare stocks in another portfolio. You can have entertainment stocks in a third portfolio. So you can keep as many portfolios as possible. But how do we grow and manage these portfolios? There are a lot of ways we can manage and grow a portfolio, but I'm going to talk about the 4 basic ways in which one can manage and grow a portfolio. The first one, which is the easiest, is called buying and holding. Buying and keeping investments is one of the simplest ways to grow your money, and it can also be one of the most effective over time. So what does this mean exactly, buying and holding? Buying and holding simply means buying a stock without the intention of selling it. So let's say I have $10, I buy the stock for $10, and my plan is to just hold the stock. I don't plan on selling it anytime soon. It requires less time. You don't have to go there every day to check your stock. You just buy and then you forget about it. And then maybe 5 years down the line, you check again. If you think you want to sell it, then you can sell it. So this is usually good for people who have work full-time or school full-time. You buy the stock, you forget about it, you hold it, no selling, until you feel like, it's good enough for you to sell it. So let's say I buy a stock for $10, and then 5 years down the line, it's $90. Maybe I want to sell it then because I've made $80 profit. So that's buying and holding. That's one way you can grow your stock portfolio. The next method I'm going to talk about is called market timing. And this is a direct opposite of buying and holding. This is for people who pay closer attention to the markets. They can outperform the buy and hold method if they can perfectly time the markets and consistently buy when prices are low and sell when prices are high. So what does this mean, market timing? Market timing requires people with prior knowledge, with background knowledge, people who can see trends, people who can see patterns, people who can forecast. Let's say I have a stock called Michael's stock, for example, and there are investors who want to invest in my stock. They have to know what I've been doing in the last 10 years. How has my stock been performing in the last 10 years? How's my stock going to perform in the next 10 years? So this requires a lot of time. It requires a lot of time for you to be checking the market every day. So if you want to do this full time, if you want to do this part-time, market timing is probably your best option to just observe the market and see which stocks you probably want to invest in. The next method I'm going to talk about is called diversification. And diversification in the sense means variety. Diversification can minimize or eliminate many different types of risk, including company risk. So how do you manage your stock? By diversification. And, as the name says, diversification, it literally means to just diversify and split your stock. Let's say I have $90 and I want to invest my stock. I want to invest that money in the stock market. Now there are different sectors I can invest in. But let's say I take all my $90 and invest in entertainment, for example. And the entertainment industry is facing a crisis. I run at the risk of losing all my $90, right? But let's say now I want to diversify. I want to play smart. I can invest $30 in entertainment, $30 in technology, and $30 in healthcare. So now, even if the entertainment industry is crashing and burning and I'm losing all the money, I still have money in healthcare and technology. So diversification is one way you can basically grow and manage your stock portfolio. The last method I'm going to talk about today basically is investing in growth sectors. So investors seeking above average return in exchange for increased risk and volatility should look to the areas of the economy such as technology, healthcare, construction, and small cap companies. So you want to invest in companies basically that are growing, in industries that are growing. For example, technology. We all use technology in our daily lives. You're basically able to hear and see me today because of technology. So now we have virtual reality. Where do you think technology is going to be in the next 10 years? Where do you think technology is going to be in the next 15 years? Is it worth investing in technology? Absolutely, yes. Same for healthcare. Ask yourself these little questions. Healthcare, do we need healthcare? Are we always going to need healthcare? Absolutely, yes. the health sector is a growth sector. So you want to invest in the sector. Dangote Cement, for example, those are stocks you want to look into and invest in. Construction, the construction industry, it's huge. People are building houses. People are building houses every day. Is that a sector that's going to grow in the next 5 to 10 years? Absolutely. That's a sector you want to invest in. So that's another method of basically managing and growing your stock portfolio, is investing in growth sectors. And then to the next question, Stanley, it says, should one invest in the stock exchange for the long term or short term? And personally, I think this is it goes individual by individual. This depends on the individual and what their plans for investing is. So are your goals short term or long term? And I know a lot of the speakers who've been on today talked about long term goals, middle term goals, and short term goals. So do you want money? You want to invest today and get your money next year? So it really depends on you. Do you want quick money, or are you patient enough to wait for a longer period? And if you answer those two questions, one, are your goals short-term or long-term? Do you want quick money, or are you patient enough to wait for a longer period? If you answer those two questions, you'll be able to determine what's best for you. Personally, I prefer long-term investments. I want to invest and completely forget about it. I'll check again in a couple of years, because I go to school full-time, I work. So I usually don't have time to be on the stock exchange every single day. So again, the first method of basically growing and managing your stock portfolio we spoke about earlier, buying and holding. That's what I do. I don't have time to be coming to the stock market every day. In fact, it increases stress, you know what I mean? So I just want to invest and be done with it. But yeah, that's all I have for you guys. Thank you.
Thank you very much, Michael. Thank you very much. We've learned a lot. Michael talked about managing a portfolio. He's talked about if you want to manage a portfolio, there are 4 ways. The first one is buying and holding. Second one is market timing. Talked about diversification, and lastly, he talked about investing in growth sectors. And he's also mentioned that he likes it if one would invest in the long term. Yes, thank you very much. Thank you very much to all our panelists. Now, I'd like to ask the audience if you've got questions. Our panel of experts are willing and are ready to answer your questions. Do we have any questions from the panelists, or does anyone want to add anything? Yes, Michael. Go ahead. Michael, you are on mute.
Oh, is
Hi.
it my? Oh, okay. It's another.
Go ahead.
Good evening. Can you hear me?
Yes, yes.
Great. Thank you so much for hosting the event. I'm having a good time learning about the exchanges and the like. I have a question regarding the cross-border investing. In terms of central banks, Malawi is currently going through a forex crisis, so there's limits on forex, what we can do with our forex. In terms of what are ways that investors wishing to invest in other countries, such as the Joburg Stock Exchange and the Egypt Stock Exchange, how can they best go around this?
Kafo, would you want to answer that? Or Kaylin, would you want to answer that?
Sure thing. I think you've mentioned 2 things there. There's the currency situation as well as how does one actually access the other markets. Currently, in terms of the question on how, I think it's a bit tricky, because I think, as I had mentioned in my presentation, to say that there's actually a project where they're trying to link the stock exchanges within the SADC region. So you're looking at all the stock exchanges, including Johannesburg, Lusaka, Tanzania, Botswana, Zimbabwe, so that at least you can easily access them even here while you're in Malawi. In that case, you use the same stockbrokers that we have, the 4 stockbrokers Malawi, Cedar Capital, Continental Capital, as well as Alliance Stockbrokers. You can utilize those ones to actually access the other markets. Currently, you have to now find a contact person in those jurisdictions because there isn't a direct link that you can utilize. So you need to find who you can actually contact. Luckily enough, for most of the stockbrokers, there is already an association for the stockbrokers within the SADC region. So they do have contact details for the other players in the other markets, and they'll be able to direct you to who you can actually contact in those markets. Just to also give an example that currently we also do have investors from Zimbabwe, from UK and other countries. So it is possible if they're able to access our market, it's also possible for you to actually access the market. But as I mentioned, I think that will become a bit easier once that linkage is done. So that will really make it quite smooth and even cost efficient. In terms of the Forex situation, I think that is quite recent. I think it's really a recent development where we're really seeing that shortage of Forex on the market. I don't think it would be something that we'll experience over the long term. Currently, I know the banks have to take those measures just to make sure that at least they're prioritizing the important purchases, be it medicine or fertilizer and whatnot. So maybe in terms of how you can purchase those, it will be limited in terms of the amounts that you can actually use to buy stocks in other jurisdictions. But I think over time, that should really improve and you should go back to the normal state we were before everything happened. I hope that addresses your question, Michael.
Michael, has your question been answered?
Yes, it has. Thank you.
Okay, thank you very much. We also have a hand from Michael Mambiali. I think you have a question. He seems to be on mute. Okay, so there's another question from
Hello,
Jonas
can you hear me?
Zaitwa. Oh, okay. Yes, we can.
Hello. Okay,
Yes, you can.
Jessica, my question is on money laundering. What criteria do you use to counter the money that has been laundered? For instance, someone can launder the money from somewhere and invest it in a certain company through any other ways, so that they can to counter the bank's ways of identifying those money, so they can invest in a certain company, so that in the few times or years to come, they can withdraw that money through the banks, the same banks.
Okay, I believe somebody mentioned about KYC, know your customer. Before someone invests in stocks or before somebody buys shares or stocks on the stock exchange, they'll have to give all the details. They'll have to give the ID, they'll have to give the source of income. And even at times, maybe they might even give the bank statements just for one to know where one gets his source of income. So it'll be quite difficult for one to launder money on the stock exchange, if I am to answer your question. I believe somebody mentioned something about that.
Okay, thank you so much.
You're welcome, sir. So we had a question from Jonas Zaitwa Chisi. He's asking that when should one expect to start reaping from the stocks? What's the reasonable amount one should invest in order to make profits, in quotes, Malawi? If one invests in the long-term period, does it mean the stock grow? What if there is a market recession within your long-term stock plan? And lastly, he's asking, is the involvement of brokers monetary? If yes, how expensive are they? To our panelists, does anyone want to answer this? Question from Jonas Zaitwa GC.
I can take it up since it's referring to Malawi.
Okay, thank you.
Yeah. So the first question is, when should one expect to start reaping results? I think that is usually the first question people will ask in terms of seeing the benefits of investing. But the answer might not be that exciting because there isn't really a timeline for when a share price will actually move. Of course, we know that over the long term, normally the price will increase and you see that growth in that particular counter. So you might invest today, let's say you've bought a 10 kwacha, tomorrow, if you're lucky, you might have bought at the right time. I think Michael spoke about market timing, where you can actually see to actually assess to say that, okay, with the trend that is happening here, I think if I buy it now, within a few weeks time, maybe there might be that growth. So that is just the skill that if you have that, then you can actually utilize it. But I think normally it's advisable to wait over the long term. And it's something that as young people, we have to learn, because when it comes to money, you have to be patient with it. It's not about I invest today and then tomorrow I have to get the money. And I think that translates even in other aspects of life, be it business or just your own personal growth. I think we have to realize that sometimes it takes a bit of time to actually see the results. So just for instance, I'll give an example to say that if you look at our markets, the Malawi Stock Exchange, we have quite a number of listed companies. We have one of the listed companies, National Bank. I think it listed somewhere around 2002. At the time, the price was 4 kwacha. Currently, it's around 948 kwacha. So you can see that over time, there has been that growth. Maybe there were instances where the price went down, it grew up, but over time, the trend is usually upward looking. And I think that fits into the second, I think the third question, where you are saying that if one invests in the long term and then maybe there's a recession that happens within that time, then what happens? And that's where you need to monitor your investment. I think that's the challenge that sometimes people face as well. I remember during when some of the companies were being listed, I think during privatization, there were some employers that were actually provided with shares, and they just got them, and then they just kept them somewhere. They weren't really trying to monitor how the share prices are moving, whether they should actually get out of that company or not. Of course, for them, maybe they benefited because most of the prices actually increased, but there's some that maybe they bought at a really high price and then they saw the shares going down and then they ended up selling them. Of course, now maybe they're also on the higher end, which now they also probably regret selling at an earlier time. So always monitor your investments. If you can't, always engage a fund manager or financial advisor who actually do the managing on your behalf. So you can give them the money to say, okay, this is 100,000, invest it in this way, and then they'll be able to do that. They'll just be reporting to you if you're not someone that is constantly monitoring the market. The other question was, what's the reasonable amount one should invest in order to make profits? When it comes to investing, I think it's also advisable to start little by little. And why I'm saying that is you can actually benefit from the price fluctuations. So for most of us, I think we would want to have 10 million kwacha and invest it all at once, so that at least we want to see that significant increase. But ideally, you should start little by little, be it 10,000 on a monthly basis. If you're consistent, you see that that money actually will grow significantly, and you'll be able to benefit from those price fluctuations. Maybe let's say if the price has moved to 10 kwacha and then the other time is 8 kwacha, you buy it at 8 kwacha, another time is 12 kwacha. Over time, you find that you actually use it, buy all those shares at a lower cost. In terms of, is the involvement of brokers mandatory? Currently for our market, yes, it is. As I mentioned earlier, and also as Stanley had alluded to, there's the issue of KYC that needs to happen. So the brokers are the ones where you actually open an account and then they'll be able to place the orders on the market on your behalf. So currently they are mandatory. I know I had also alluded to the issue of in the future, the plans of having a mobile trading platform that will link the brokers automatically so that maybe you don't really have to go to the offices, but there'll still be that link in between within that particular system. But for now, the simple answer is yes, they are mandatory. And in terms of the cost, they're quite low. I think if you look at the cost of the commission that you pay, it's around 2% for the first, I think, 50,000. And then if you spend, let's say 50,000, they only get 2%. And then if you go higher, I think it's 1.5%, and then it goes to 1%. And you can even negotiate those rates with the brokers. So it's really quite cheap in terms of accessing them. I hope that answers your question, Jonas.
I believe you've answered the question quite well. Thank you very much, Kelly. So you have a question from Faith C. Are there some resources or materials we can use to learn more about investing in Africa? The panelists can recommend a book. I believe that Kaho has published 2 books, and Faith C, we can arrange for you to get Kaho's book. It's on investments and it's on finance. Thank you. And we also have communication from Bongani. She's posted the Google link in the chat. So if you want, may you please link on it. May you please click on it to get your e-certificate. Are there any more questions? Before we wind up, are there any more questions?
I have a question that I would benefit from, as well as I think some of the participants as well. This one will go to Cargo. I hope I'm not butchering the name. Yeah, you had mentioned that. You had mentioned that you also do invest, is it in the US? Maybe just to share your experience and how you were able to access that market. I know as I mentioned, for African markets, it's easier because we have the context, but maybe for international markets, I think when you try to download some apps, sometimes it gives you those KYC requirements, and then maybe they need an address for you to actually be in the States and whatnot. So maybe just your experience and how you were able to access those markets.
I hope Kaho has not been booted out. I can't see him on the chat. He's complaining of load shedding in Botswana. So my apologies, my apologies. My apologies, Kelly. Okay, so we have a question from Chiponosio Nkandawire. He or she is asking, what skills differentiate good investors from average investors? Like, what skills would you advise us to gain to be better investors? Michael Benga, would you want to answer that?
Yeah, I can take this. So what skills differentiate good investors from average investors? I'd say it's the time. Again, long term, short term. What are your goals? Do you just want quick money? Do you want to understand the market? There are lots of resources on YouTube. One of the panelists, like they said earlier, he has 2 books on investing. So if you do have the time to actually sit down and consume these materials, watch YouTube videos, read books on the continent, follow trends, follow the markets. It takes a lot of time, trust me, I'm a long-term investor. I buy and I hold. But if you actually want to be a really good investor, you have to just take the time for yourself to read the materials, to watch the videos, to listen, find podcasts you can listen to on African investment. Go on there, find blogs on African industries. So what differentiates really, it's the time you invest in just learning the material and just learning where to invest and just learning what stocks to invest on. And I think if you do that, if you're patient enough to be able to do that, you'll definitely move from an average investor to a good investor. Thank you.
Thank you very much, Michael. Kelly, I see that Kaho is back. Would you like to ask the question once again?
All right, Kago, my question was on how you were able to access the markets in the US. I think you had mentioned that you've been able to invest in some of the stocks within that market. I know that it's a bit difficult when you try to maybe download some of the apps that can actually assist you in investing, especially when it comes to the KYC requirements. They'll normally require an address and stuff like that. So how were you able to access the markets in the US so that at least we can also learn from your experience?
Hello, Kaho, are you there? We seem to have lost him. Okay, we have a hand there by Beatrice Kasambwe. Beatrice, the mic is yours. Do you have a question?
Yes, I do. Thank you, Stan, and thank you to all the presenters. I have a question. My question is going to the introductory part of the stock exchange. I just wanted to understand when one is considering to start investing in the stock markets, what are the key analytical points one has to look in a company before choosing a company, apart from the financial report and company growth?
That's an interesting question. Which panelist would like to take that up? Michael, Kelly, Kaho, anyone?
Sorry, what's the question again?
Beatrice?
Can you repeat?
Yes.
Yes.
Please.
So I was asking the key analytical points one has to look in a company before choosing that particular company to start investing in, apart from the company financial report and company's growth.
So you're asking what else can someone look for before they invest in a stock, right?
Yes, they must not miss points that one has to look at before they choose that particular company.
So just like I spoke earlier about what differentiates a good investor from an average investor, you have to be able to study the market dynamics. So if you want to invest in, let's say, Dangote Cement, for example, people are always, let's just focus on the construction industry. People are always building houses. We know people are going to buy cement today, people are going to buy cement tomorrow, people are going to buy cement next week. So the cement industry is booming, the construction industry is booming. So I don't even need to look at the financial statements, for example, of the company. Just by thinking of how this system works, how this industry works, or you could focus on a simple industry, watch YouTube videos on that particular industry, see see how they're doing right now. Are people going to need this particular product in the next 5 to 10 years? And just kind of like what I spoke about, investing in growth sectors. So that's one way, again, you can even look without looking at the financial statements and just deciding which stocks you need to invest on.
Yeah, just to add on to that as well, I think one of the other issues that you have to look at is the management as well as the corporate governance structure of the company. I think when it comes to the team that is running the business itself, it really does play an important role in terms of where the company will go. So you look at what is the qualification of the CEO of that company. Do they have an adequate team that can actually carry the team, the company to the goal that it actually aspires to? And then there are other issues that sometimes you overlook, but they're quite becoming important currently, especially with issues of sustainability. So look at what is the approach in terms of sustainability of that company. Do they have a strong ESG reporting framework? So I'm looking at Do they take care of the environment in which they're operating? Do they look at the social responsibility that they do have? What is their approach to corporate governance issues? Those do play quite a significant role, because when you're looking into investing into a business, normally it's for a long term, and you want to know that whatever activities that business is actually trying to engage in is something that is sustainable, in a sense that they shouldn't run into problems of now being fined by other regulatory bodies, maybe just because they're polluting the environment, or maybe they're not operating in the way that they should. And then you also have to look at, I think, something that Michael alluded to, what is the stage of growth of the sector that company is operating in. So if you're looking at where we're coming from, maybe where we had the telephones, the ground lines, and let's say you want to invest into that sector, maybe it's something that is drying out a bit. Maybe you should be looking at maybe mobile phones now. So you look at, okay, at what stage is this company, is the sector or the industry in which this company is operating at? Is it at a growth level? Is it like something that is matured? Maybe there isn't really that much room for growth. So those are just some of the other issues that you can look at apart from the financials.
All right, thank you so much.
Thank you very much. I've got a hand from Ben Mlenga. Ben Mlenga, the mic is yours. Hello, Ben, are you there? Okay, Consolata, your hand is up.
Hello, Stanley. I just wanted to share a little bit more on a certain question that was asked previously on what resources we can use in order to learn more. Just to add on what Michael had said, you can read some books. I believe that there is that snowballing effect. When you start reading one book and you look at the references, or you look at the resources that that person has used to come up with that piece of material, it always leads you to the next ETC. For example, on YouTube, there's a certain YouTuber called Maro of Africa. I'll share a link in the chat. He is documenting his journey of investing in various stock exchanges across Africa. So I think that's also a very good resource, because you can learn from somebody who's also on the ground with it. And I believe as he's sharing his sources of information, because he shares a lot in relation to where he gets the information, and he's also, I think, building a community or something of that sort. So I think that can also be a good resource for somebody who wants to go that route. Thank you, Stanley.
Thank you very much, Bongani, for that. There's another question on the chat from Andrew Judzabanda. He asks, what is your understanding on the Jobs Act of 2012 as it relates to the African markets? And can social enterprise be listed on the stock exchange? Interesting question. Doreen, you're a lawyer. What is your insight on this? We seem to have lost Doreen. Anyone to take that up? That's a very interesting question. Okay, there's another question. Comparing the Malawian Stock Exchange, we have a number of listed companies. Should investors anticipate more patience with it? Comparing the Malawian exchange, we have a low number of listed companies. Should investors anticipate more patience with it? Luckily, we've got the operations manager for the Malawi Stock Exchange. Maybe she might answer that. Kelly, would you like to take that?
Yeah, sure thing. In terms of the number of listed entities, I think currently we're standing at 16. It's relatively low if you compare to the number of listings within the region. And I think when it comes to the stock market, it's not really separated from the macroeconomic environment. That is to say that if the economy is not performing that well, that also reflects in how companies are able to access the market, and that translates to less companies being listed. But in terms of the benefits, I think that doesn't preclude it from benefits. If we compare to the performance that was registered in 2021, that was last year, you find that we were the third best performing stock exchange in Africa. So we registered a return of 40.05%. I think in US dollar terms, that was around 35 or thereabout %. So yes, for those that do invest and they're patient with the market, I think they have been able to access, to be able to see benefits from that. And I think there are quite some profiles, high profile people that actually do conduct those seminars where they share their investment journey. You can look at people like Simon Itaye. I think they've been able to grow their portfolio to billions just by investing on the stock market. There was actually a series that was being run by Nico Asset Managers. I think you can also look at that just to see and appreciate the experience of others and what they've been able to earn by investing on the market. Just to also correct on the title, it's Chief Operating Officer, not Operations Manager.
My apologies for that. My apologies. Okay. So any more questions before we wind up? Before I give the floor to Bongani Consolata Tetwa for her final remarks? Anything? So Consolata, the floor is yours.
All right, thank you so much, Stanley. I just want to thank everybody else for being a part of this event, making it as lively as it has been. Clearly, we have not been able to tackle a lot of the questions maybe that have been asked, and I believe that most of you may have even more questions relating to this topic. But then I hope that this will just be something that can spark up that interest in you, and you will continue with that research, read more books up until you have that information, enough information to make such investment decisions. So once again, I have posted on the chat box a link to the Google Forms. So please fill out that form so that we can be able to send the attendance certificate to your email address. And a recording of this event is going to be posted on our YouTube channel. The form includes, at the bottom of it, it includes a link to all our social media platforms, including that YouTube channel. So just be on the lookout. The event will be posted there. It will be posted in full and bits and pieces as time goes. Otherwise, thank you all so much. Back to you, Stanley. Hi, Stanley. I think you were on mute.
Oh, my apologies there. Okay, my apologies. Okay, so finally, I'd like to thank our sponsors tonight. The Jazza Center, Ritz Attorneys. I'm actually in one of Ritz's offices because I did not have lights, and Ritz was so kind to give me one of their offices. Ritz Attorneys, thank you very much. Thank you very much to Marie Fasasa. Thank you very much to Nani's online shop. The African University Students Platform, thank you very much. Borderless Podcast, thank you very much. To our panelists from Malawi, Kelin Kanyangara, thank you very much. Doreen Manjandimo, thank you very much. From Sierra Leone, Michael Benga, thank you very much. And from Botswana, Gafo, thank you very much. You guys were amazing, you guys were awesome. We have to go. This marks the end of our panel discussion for tonight. Be on the lookout for the next panel discussion, which Bongani is in the kitchen cooking with a great